Yes, sir. We'll start. Good morning,
Okay.
all.
Uh,
Yeah. Yes, sir.
are you starting something or shall I go on, sir?
I'll start, sir. I'll introduce you, then we can start. Good morning, all. I'm Dr. Chanakya. I would like to welcome you all to the webinar on innovations and opportunities in the Indian financial market as a part of Chanakya series of business management lectures organized by Dayanand Sagar College of Arts, Science and Commerce, MBA BU, under the Finance Club with VIKAS. Mr. Glenn, our founder director, Finmark Trainers, was supposed to address today, but due to certain unavoidable situations, he was not able to make out. And it's my pleasure and privilege to introduce another eminent speaker, Sivaram Ravindran, trainer come business development manager from Finmark. Sivaram Ravindran is a capital market expert with over 15 years of experience. He has rich experience as a broker, investment advisor, and more recently and importantly as a financial market trainer. His expertise encompasses equity, commodity derivatives, and mutual funds. He started his career with Navia Markets as a management trainee in 2005. He joined Hub Finance Australia and commenced his career as a trainer. He is presently working with Finmark Trainers, a leading financial market training company, as a business development manager and trainer. It's our opportunity to listen from such eminent speaker. So now it's over to you. You can continue, sir. Mr. Sivaram, sir.
Thank you. Thank you. Thank you, sir. Thank you to Dayanand Sagar College. Thank you to the students. It's a privilege to be back here, although it's virtual. I'm hoping that before we close this year end, I'm able to share a lot of thoughts, particularly in this domain of the financial markets. I'll just start off with the main theme on the innovations. In the last 15, 20 years of my career, which I've been associated with the financial markets, I'm pretty fortunate in the financial markets. It has proven to be an asset to each and every individual associated with the markets, although directly or indirectly. But for our students, let me give you some of the takeaways. What you need to look at this program is that it should basically see how I would put it this way. Help you build a life skill. This is a life skill. It's again an objective again for these kind of programs are it also helps you throw some light whether you can actually develop a career in finance. So that's one of the reasons why we keep doing these programs. In the last 3 years, we are very happy to do batches, and I'm still in touch with most of the students and continue to be associated because it's a learning lesson. It's a lifelong learning lesson, I would say. To begin, when we talk about the financial markets, I'm sure you must be learning in your academics. When you look at the practical point of view, I believe that it basically helps you build some kind of a discipline. In the last 20 years, when I've been seeing and myself being an investor, it has so happened that many of the products have so evolved in such a way that it is so common to see a common man to actually start appreciating the stock markets, not only the share markets. I would say that it has so evolved into newer and newer products, something as called as a mutual fund. When I wanted to, look at a mutual fund, it was so challenging to actually put money in the mutual fund in the initial times. We saw mutual funds from the private sector. They opened up sometime in 2002. It was so challenging that it was difficult for people to move away from their age-old, keeping money into savings and move away from savings and come into investing into a little more riskier aspects. But why is it that savings today is now kind of shunned off because I would give it again historical figures. See, in the years we have seen more of the people have basically been savers. Largely in India, I think 47 as of now, 47% is what is the savings to GDP ratio. And I think that is some of the highest figures in the world. If you look at an investment to GDP ratio, just a couple of years, maybe 3 to 5 years, it was only 4%, or rather maybe only 3%. We were much lower than even Pakistan, Bangladesh, or Sri Lanka. It is only gradually that we have seen people moving out of savings and coming into investments. When I talk about investments, it is now that we are seeing people have gathered momentum putting money into mutual funds. So why is so good about mutual funds? I think today mutual fund companies, rather they are called as asset management companies, they are particularly now today managing around 26.5 trillion rupees, 26.5 lakh crore. It's one of the highest figures, and we are likely to see it double in the next 10 years, which means more and more people are getting out of the savings and coming into investments. And one thing what does amaze me is, although I have been an investor in mutual funds, it is only in the last 5 years that I've been doing it consistently. When I do it consistently, I do it something like monthly basis. We call it as a systematic investment plan. And we have actually, it's not a figure which I have arrived at. It's a basic scientific method which is actually gathered from the big guys. I have a question, students. I think if I make it a little more interactive, it makes sense. Otherwise, I just keep talking. It might look boring. So, students, I have a question here. If I were to invest 1,900, or let us put it around approximately 2,000 rupees a month into investments like a mutual fund. Can you tell me what would be the amount after 40 years? Why I take 40 years is because today, if you're 20, a 20-year-old student starting to invest 2,000 rupees a month, and they take it up to 40 years, that means by 60 years you will retire. Can you, or can anybody guess, a wild guess, let me a wild guess, how much would that amount to? How much would it have grown to? Can anybody guess that amount? 1,900 to be precise, or for a round figure, 2,000 rupees a month. You start at 20 years and you invest 40 years, another 40 years. So how much would that amount would have grown to? Anybody can guess? I would like to hear it from the students.
9,60,000.
If you're not able to speak, you can put it on chat also. 1,60,000, is that what I heard?
9,60,000.
9,60,000. Precisely, Swati. You have actually taken it on a very easy method. You have taken 2,000 a month, so 12 months. It's 24,000 into 40 years, 9,60,000. Absolutely, a correct figure. But when you invest, it literally has to grow with some certain percentages. Any other guesses? Okay, I'll not keep anybody waiting. See, we have understood that this amount would actually, on compounding basis, Sachin, absolutely, but it is going to grow much more. It may go up to 4 to 5 crores. 4 to 5 crores. That's actually the principle of compounding, but it grows in such magnitude. I was pretty inspired because maybe around 10 years back, I noticed one of my, in fact, my directors, Glenn, his friend had actually started investing sometime as early as 2008, just after the financial crisis took place, 2008, 2009, and 10 years. He had been consistently putting a sum of around 70,000 rupees, and he did that for 10 years. When he did that, as per a general calculation, it's 84 lakhs, but that has compounded to around 3 crores. And that's something which put me into the driver's seat and thought, why not we also do it? And I have been ever since in the last 5 years been doing the same thing. Although I have been working with this industry, never enjoyed till I saw it in my own eyes that investment has been the best vehicle to actually build wealth. And nobody told me when I was your age, or maybe when I was in something like 35 years. It took me years for me to understand. And when I saw it from somebody's investment, it actually gave me the confidence that even I can do it. So it's something which you have also got the opportunity. The day you actually start working, day one, you should be also be able to do something like this. See, if you don't do it at 20 and you don't put 2,000 rupees, what happens is when you think you want to start at 30, you actually put something around 17,000 rupees to reach that final goal of 5 crores. If you have a personal goal of 5 crores, if you don't do it at 30 years and you do it at 40 years, you actually put around 85,000 a month to reach that 5 crores. As your age progresses, you miss out the opportunity of this, putting a smaller sum of money and getting the big returns out of the financial markets. If you don't do it at 40 and you do it at 50, you basically put around a lakh and 70,000 rupees a month to reach that 5 crore goal. So the earlier the better. The earlier the better you start, it reaps such high benefits. Mutual funds is some of the I wouldn't say it is an investment. It is a vehicle to reach your investment goal. So that is a difference. But you need to really get into this bandwagon to understand the full concept of this, how this mutual fund works. And it's only when you start doing it you understand the benefits of this mutual fund. The concept of mutual fund, it so happens that it evolved into a new product which are called exchange traded funds, or in short it's called ETFs. Today ETFs are one of the most popular investment instruments which a common man can look at. Why so? Because today, if you take an ETF, it has so evolved or innovated into a product called gold. Now, gold is something which preferably ladies would be interested to buy physical gold or maybe jewelry. And what do they do after that? They basically keep it in the locker. I don't see many of them going to be wearing jewelry and walking on the road. But what does it give you in return? Jewelry does not give you much in return. Maybe gives you some kind of a pleasure, in having something in hand. But today, ETFs have actually brought innovations in gold, made it a financial asset, so that you can buy not just as a 1 gram going to a jewelry shop. You can actually buy 1 unit. 1 unit of an ETF is equivalent to 0.001, which is close to 1 unit is something like 45 rupees, because as per the international price of gold, we have actually come to 1 unit or one ETF is 45 rupees, something which you and I can afford. A common man can afford to buy electronic gold. ETFs have actually helped us to build gold as a financial asset. Why is it so important to be gold as a financial asset? Is because gold is always known to be as an instrument of safety. Why do I say it as safety? See, certainly, if, for example, I would say my daughter's fees this year or maybe next year, the school thinks of raising another 10% hike. So where do I go for that extra 10%? Gold has always been that instrument to help me sell at the time of emergency. That is why it's called as the margin of safety. I can sell gold, which is an electronic form, and I can immediately reap the benefits in 1 or 2 days. That is how liquid gold is when you do it as an investment in ETF. If you go to a jewelry shop, you may not be able to sell it as liquid as it is in a financial asset. Second advantage of a gold is that, see, you don't need to have a locker to put all this gold jewelry. Since it is an ETF, we basically do it in the form of a demat account. I can keep it safe, it's secure, and moreover, I don't have to pay any kind of a secure margin wastage or something like that. All I have to do is just when I purchase or sell, I basically pay a small brokerage to the broker, and that's how efficient gold ETFs have become. Today, gold ETFs have surpassed the kind of amount of gold being bought by common people. You won't see many people don't find too many people walking into a jewelry shop anymore. People have started getting the awareness. People have started getting gold in electronic form today. It has actually gone to 40,000. 4 lakh. 4 lakh is the kind of the figures have got in terms of overtaken the investments over physical jewelry. So this is one of the finest innovations that have happened, in ETFs through gold. So talking about gold, one more innovation that has interestingly happened is over to the real estate. Real estate over the years, we have always seen it as a physical asset. A land is which we buy and we build house. But we also look at putting, when we get one more asset like a second house, we think of actually renting it. What we noticed is, when you rent a house and purchase it and rent it, basically you put an investment of 2 crores and you rent that property. Let's say in Bangalore, it may be around 40,000 rupees. If you look at for a 2 crore property and you rent it out for 40,000 a month, just see what is the yield out of this. You basically get something like, 3 to 4% is what I understand. 3 to 4% yield on an investment of 2 crores is one of the lowest rental yields in the world. I understood that even Africa has got much better yield when they rent out properties. Today what has happened is, they've also brought an ETF concept into REITs. REITs are called as real estate investment trust. This is one of the finest innovations that have happened in real estate. I can actually buy a REIT electronically through the stock exchange. One of the first companies to launch a REIT in India is from the homegrown Bangalore-based Embassy. You might have seen a couple of properties of Embassy. Some of the IT parks. I've seen 2 properties in on Bellary Road on the way to the airport. It's called a Fortune, a private residence, and they have a kind of a hotel next to that. And one of the IT parks I think the Outer Ring Road. So what has happened is, they have actually Embassy has actually pooled all these properties. They've got around 4 to 5 properties in Bangalore alone, and they've pooled everything together and put a financial value to that property. So let's say something like 10,000 crores. Now, when they put such 10,000 value to the property, what are they doing is they break that 10,000 crores into smaller units in the value of 60,000 rupees. So one unit is 60,000 rupees. What happens is it is available in the exchange. You and I can buy that one unit. Why do we buy this one unit? Because when you buy this one unit at 60,000 rupees, in turn, the real estate embassy group will use this money to actually build or expand their capacity, and in turn their properties are being rented out and they get rent in return. This rent is again given to the unit holders like you and I. And what is the yield that you get out of this? The first time when they brought this kind of a ETF, REIT, it's around 2 years back, is what I remember. And they gave a rental yield of 8.25%. It is much higher than getting a rental yield if you rent out a commercial property. Commercial properties give you much better yields. But people like Embassy or maybe a Raheja Group, he is the second REIT that has come out. We're going to see one more REIT coming out maybe after this 2021 starts. I believe today the rent yield is around 4%. Still better than even if you keep money in a savings or an FD. So this is one of the finest ETFs innovations again happen in real estate. And moreover, if your property, if that property is value is also going to be increasing. The value what you hold at 60,000 may go to 70,000. You also see an appreciation in the value you have invested, plus a rental yield of between 7.5% and 8.25%. It's a double advantage putting money into electronic form of real estate. So this again has been some of the products that have actually started gaining popularity. And when such products are going to keep innovating itself, you'll see more and more sectors. I would say today you're seeing Embassy REIT or or maybe a Mindspace, which is Raheja Companies REIT. Tomorrow you may see something like a Koramangala REIT. That's how we actually perceive, because this is more prevalent in the US. This is how it happens in the US. You may see a golf course REIT. You may see something like a Chennai REIT. That's how it's going to be happening. And in the end, what is the outcome is more job opportunities. So the better you are aware of all these products, you invest directly, it actually improves your vibe with the financial market industry. Let me come on to one more innovation. This has basically happened in the before I get into that industry, there's one more ETF today which I have just started investing. See, in the earlier days, it is very difficult to own a share of a foreign company. Like you might have seen some of the largest companies in the world, like Amazon, Apple, Facebook, Netflix, or Google. They are basically called as the FANG, F-A-A-N-G, FANG companies, FANG stocks. If I wanted to own FANG stocks, I need to personally go through a stockbroker who has a representative in the foreign country, and so which means I have to open two accounts to basically buy one stock of an Apple or an Amazon. Today, what has happened is one of the indigenous broker here in India itself has tied up with the Nasdaq, the US stock exchange, and brought out an ETF. So if I want to own all these five stocks together, all I have to do is just invest close to 1,000 rupees and own one unit of all this. Basically, this is one of the ways how to actually get a part ownership of these companies. So if you look at the the ETF, if you actually visit the website of National Stock Exchange, you will get more details on how this ETF is broken into. Besides these five companies, there are other top five companies also. So I basically part own all these 10 companies of one of the largest companies in the world. One way, it's called as the Nasdaq ETF. And basically, if people wanted to own such stocks, they can look at these kind of schemes. And we know that these companies are only going to keep ever growing and continue rewarding their shareholders. Why not own stocks and make it a part of your life? I think on the stocks, this is one of, again, a finest ETF that we have seen in the foreign countries being partnering with the Indian brokers. It's basically called Motilal Sachin. Sachin has actually partnered with Nasdaq and allowed a common man to basically buy and sell Nasdaq ETFs. If you think you want to invest in China, there is one more called as Hang Seng ETF that the stock exchange allows. If you visit the exchange website, you will still get more and more details. And this is what is so nice about the financial markets. 20 years is a pretty long period, but I have seen in one particular time or the other, something or the other is happening. So this is what has happened in the financial markets. Let me go on to one industry, which is the banking industry. Banking is basically known as the age-old business of borrowing and lending. But what has happened today is, in fact, which we started seeing from last year, this is something called as neo-banking. Now, neo-banking is where we don't have a physical bank branch. We don't have people, humans working for this branch. It is all electronic, more like robotics. If I talk about robots, a few branches of ICICI Bank in Mumbai have been, supervised by robots. So we are actually seeing more and more humans being, are reduced in the banking system. And why is that happening? Is because banking no more is one of the favors of places to work. It so happened that we felt that there is no need for people to actually make banking possible. Maybe just one or two people. But if you look at a branch, you go to any bank, smaller places will have only two or three people working there. One of the reasons is because today you put something like a lakh of rupees in a bank. I believe all that it gives you or returns is something like 3.5% in a savings account, or maybe up to 6.5% in a fixed deposit. And that does not require, it does not need for people to work there and help or get returns out of this bank system. What has happened is we generally need more people to help advise to invest into financial markets, because that is where the risk percolates, and we need efficient and professional people to advise the common people where and how to put money in the financial markets. Banking no more is actually a place when people used to perceive it's one of the best and secure jobs. Banking itself has moved away from the traditional old banking system of lending and borrowing. If you look at any private banks, take a HDFC Bank, or an ICICI Bank, Axis Bank, State Bank, they basically have, besides their banking system, they have a wealth management division, they have a mutual fund, they have an insurance, they have even stockbroking services. This is where the human intervention is required, and they need people who are professional. When we talk about professional, it's basically they need people who are mandated by certifications from the Ministry of Finance through certain industry bodies like the National Stock Exchange or maybe even SEBI. But let me just give you a small note about neo-banking before I go into what we actually do. See, neo-banking is what has actually taken the banking industry yet to go by storm. But basically today, if I want to open an account, it can happen in 3 minutes through a neo-banking. Or if I want to apply for a loan, it just takes half an hour to 45 minutes. Now, they also issue debit cards and credit cards, but today they don't issue the physical one. They basically do it electronic. You don't hold anything record-wise or a document of this new bank. Everything is electronic. So if I were to use a debit card or a credit card, particularly I'll take up this example when if a minor wants to use a debit card, the parents have a control over them in such a way that if the minor is going to use this debit or credit card to go and buy liquor, he is not allowed to buy liquor. But we won't have control as a person. The debit card has been already put restrictions by the parents that in case such a transaction is going to happen, it will get declined. So that's how wonderful the neo banking system. Not good news for minors, but parents are very happy. But I think it's one of the nicest innovations that have happened in the neo banking system. But moreover, besides that feature, neo banking also allows a person to hold rupees in your account. You can also hold dollars, and overall, there's one more product called cryptocurrencies. So tomorrow we may also see that we can pay for buying a product either through rupees or a dollar or maybe even cryptocurrencies. So that is what is happening in the neo banking system. I think only one or two banks are yet to get the permission, but we are likely to see RuPay is one likely to get permission to start neo banking. And one other one is Kotak Bank is actually tying up with RuPay to start. They have already started one kind of a service. This is where the debit card concept actually we understood came from. So this is some of the nicest innovations happened in the financial system. Besides all this, let me also put some light on the capital markets, which I have been working in the last 15 years. It's been a tiresome journey, but we are actually seeing, if you look at the index, the Nifty or the Sensex, they're all making lifetime highs. And some of the places one should rather be in. And also, why? Because a lot of more people want to understand the capital markets. But it either takes one to have a trial and error, and by the time they actually miss out the bus, they don't get the best out of the markets. Very fortunate for me and my directors being in this field and enjoyed every moment in the markets. But one thing I would like to put light on in the capital markets is start investing. Today you can see you can buy 1 unit of gold at 45 rupees, 1 unit of REIT at 60,000 rupees. A mutual fund you can start as less as 500 rupees. You can buy even a Nasdaq ETF for 1,000 rupees. But if you look at the capital markets, I can buy if I know if I have to buy a company like Airlines, I just have to put one share. It is costing around 2,000 rupees. If I don't have 2,000 rupees in my hand, I can rather put one share of at 275 rupees to buy State Bank of India. If I still don't have 275 rupees in my hand, I can buy one share of Vodafone Idea, which is at 10 rupees. You won't even get a recharge at 10 rupees. So this is how good the stock markets have been. But how does it actually reward a person? Stock markets have also, in my career, I've seen people who have invested in the right companies have actually been rewarded wealth. To just give you an example, when you start investing or anybody wants to maybe start a business of their own, capital markets has always been a place where they can actually garner funds from investors. Investors may come in the form of a seed capital investor. A seed investor is somebody who is ready to give money and help you start up the business. One example would be, if you walk down the Brigade Road, you will see one nice a store called Wow Momos. They are one of the finest examples of the seed capital investors. See, when they started, it was started by two BCom graduates from Calcutta, St. Xavier's College. They started this business with a small seed capital of 30,000 rupees. And as they started growing their business, they actually got into venture capitalists. In the sense, a venture capital company had basically invested around 836 crore rupees. It happened 2 years back. 836 crores of rupees invested into Wow Momos, and this is how they've expanded. They found the business model so thriving, and this is how the business actually grown. So the business model, if you think you want to start a business of your own, if an investor likes your model, they are ready to put in piles of money into the business. If you take a company called Byju's is one of the largest platform in India of this e-learning concept for schools and colleges. Today, Byju's is the largest, or rather, I would put it this way: the owner of Byju's, Baiju Ravindran, he basically was just a normal school teacher from a small village. And I even recall hearing stories that he was even lecturing in Jyotinivas College. And when he was teaching in a college, he was getting around 16,000 rupees of a salary. And I recall his story that the moment his methods of teaching was so different that he was forced to hire stadiums to give lecturing for 25,000 students. That's when this concept of e-learning came into his mind. And it so happened that it so evolved that it attracted foreign money. And today he is around 39 years, and he is one of the richest, youngest Indian. His company is valued at around 107,000 crores. This is how big the company has grown, and he's also sponsoring for the Indian cricket team, and this is how he has made good use of his money. The capital markets again has been so rewarding if you put money into the right company. One more example about the capital markets is you might have heard of a brand called DMart. DMart is a retail store, one of the biggest formats in India. It is owned by one nice gentleman called R.K. Damani, Radha Krishna Damani, in Bombay. And one nice story about this man, how he has hired his sales manager, and his name is Neville Narone. He comes from Mangalore. He moved to Bombay, and he was working as a salesperson for Hindustan Lever. What amazed this man, R.K. Damani, was even during a big rain that happened on that day, this guy Neville was actually supplying soaps to some of the stores. And he called him personally, see, I like the way you work and the attitude you show towards work. I would like to hire you for in my managing one of my stores as a sales manager. And he immediately took up the offer. In a couple of years, he was actually promoted, and today he is the CEO of DMart. And he was a person who was making around 20 lakhs a year, and it's not a bad sum in a place like Bombay. But seeing his attitude and the way he works, the company chairman R.K. Damani gifted him something like a lakh of shares with no value to the CEO. And when DMart 3 years back listed their share onto the stock exchange from zero value, what Neville was saying is, from where I was just getting, he had just 2 lakh rupees in his account at that time. The next day I am seeing the value has grown to 1,300 crores. That's how the stock markets have actually been used as a vehicle to build wealth. So my urge is actually, once you finish your education, or I've known many of the people here in India, moment they start education itself, they start investing. But the question is how you invest, the way you invest. The one way is to actually learn to invest. You learn the nuances of investing, it makes life more easier. So some of the things what I also like to highlight is in the last 3 years, us associating with Dayananda, we basically do quite a few training programs and make students understand the nuances of investing. When you understand these things, you basically apply that into your practical life. You need to see how you up your skills, look at certification from industry, and this basically helps you build some visibility to the companies. I'm sure many of them appreciate this kind of innovations, but you put that into practicality, it will make a huge difference in your life. I think I missed out one more innovation that has happened, is something called as algorithm trading. Now, this is that is just to, I would say, caught fire in the last 2 years, because today algo trading, if you look in the US, 90% of the trades are become computerized. In India, algo trading, we have reached around 40 to 42%. Now, what is algo trading? Algorithm trading is basically a software. You get it programmed by a software engineer. You understand the market movements. You basically upload this program into the stock exchange platform, and instead of you doing the trades, the computer does the trade. The computer does the trade, so that the headache, the emotional, methods that you go through is totally taken care by the stock exchange, by the algo program. You no longer become, the brunt of the stock market movements. The software takes care of all that. So that's what one advantage people have found of algo trading in the financial markets. And I'm sure tomorrow when you finish your degree or your post degree, you move into work, you will also one day look at inventing your own program and start looking at algo trading, because this is the future. This is what is happening in the stock markets. I'm sure you have got the sense of what I've given you. I'm almost done with the set of programs what I wanted to plan for you. I've discussed, basically just to sum it up, I've discussed on the mutual funds. This is what has evolved into ETFs, and then we moved into gold ETFs. We saw real estate being also electronic. We saw the NASDAQ, where you can own foreign stocks in the form of an ETF. You have seen innovations in the banking through a neo banking, and above all that, we have seen something on algo trading. And getting into this industry, I've not at all repented, because I still continue to invest. I still educate people. I do a lot of programs like how I've been doing here. And I've highlighted the importance of being certified, because this is what is mandated by the industry. Be certified, you see more and more value add to yourself. Thank you so much. Here, any questions? I'm free to open. You can ask me.
Mr. Sivaraman.
Yes, sir.
Hello. Maybe don't feel that I'm putting some uncomfortable questions.
Please do, sir.
It is only an academic discussion. Okay. So we have seen that the stock markets have touched 45,000, over 45,000. So in this kind of scenario, do you feel stock market is still a bet?
Not a difficult question to answer, but whenever I've seen, so just before these markets have reached this lifetime highs, sir, do you remember we saw a crash that happened exactly to be March 23rd? And that is the time when I saw the index around 7,500. I'm talking about the Nifty. Today, Nifty is trading around 13,800. It's almost ready to go to 14,000 is what I understand. But to put this into your perspective, what you've asked, sir, whenever we have seen these crashes, every time, I think the last crash I saw was in 2008. And when we saw that crash, it has only made or built a momentum and made new highs. Now, there is a reason why stocks are going up, because they're actually seeing certain indicators, what I call it as a GDP, which went to minus 23%, moving slowly towards single digits. Now it's minus 7.7. Moment it's actually going to be seeing zero, or we're going to see growth in GDP. I'm sure the stock markets will continue moving up. They are discounting the growth factor in GDP, and they're going to continue moving up. I believe that it's still there is room for the markets to go up. We may see 2021 with a bit of ups and downs, but we will still move up, Lisa. It's so amazing to see.
Positive,
yes,
about
absolutely, sir. Absolutely.
Then can I have one more question?
Yes, sir. Please, sir.
In the previous session, when Mr. Glenn came for a presentation, he was very strong on gold rather than equity.
Absolutely. The time when Glenn had done the presentation, gold was actually making new highs, and
New
GDP
highs,
at that time
and,
was the
and there
GDP
was
was
also a height wherein they were indicating that it might touch to 82,000 also. Okay,
right,
that's
right.
fine. Later on, there was a very strong recommendation that gold is a very good bet for buying at that time. That is it, just 6 months back, perhaps. So, but I made an investment of 10 lakhs when the gold was 55,000. But now there is a big depreciation, and it is around 9 lakhs now. My worth is 9 lakhs now. So, do you
Okay.
feel that gold is still a good bet?
Yes, sir. It takes what has happened in the last 2 years. In fact, gold would have been apt to invest sometime in 2018. That's when we sensed the recession.
Not
And
2008. This year only.
2018 to 2018, sir. So I
This
think
year,
that's
sir. I have
no, no, no,
purchased this
no,
year.
no, no. What I'm saying is, gold always acts as a hedge against, recessions. We sensed a recession sometime in 2018 itself, and that's when we even noticed China had been the biggest buyer of gold. Probably they would have even sensed, the recession at that time. And I believe that, once recession is started to come in, gold keeps moving up. So 2018, 2019, and 2020, we saw gold gone up around 40%, sir. So I believe this year, maybe 2021, there will be a small, a blip in the gold market. But nothing to panic, sir. We are not going to see a great move in the economy just because we had dropped to negative 23%, and we are moving up to minus 7.7%, and it may go up to 0% or 1%, and that's why the stock markets go up. So for the time being, gold will be actually kind of lethargic. It may take 1 or 2 more years for this to start moving up. So I would rather say stay invested, because there will be one form of recession coming up again, but may take some time. May not suggest you to
Okay.
come out of this loss. If you see a larger movement downside, would actually suggest you to invest some more money. But for students, I would say, just I'm not personally going against the way you've invested, but my way of actually investing is, I would rather stagger my purchases. Instead of putting 10 lakhs, I would have put 2 lakhs in 1 year, 2 lakhs in another year, 3 lakhs in another year. That way, it helps you to average out your buying prices. And that way, when the prices go up, it will somehow go above your averages. That is a better way to actually invest, sir. But
So let
not
me
to
be
worry, sir.
so let me
Uh,
be positive for some time. And on the lighter vein, let me say that let us expect one more recession so that my gold prices will go.
uh, for the personal gains, absolutely. But I
No,
think
no, no,
just
it's
give
in the
it some more
lighter
time.
vein. No, let it
Absolutely,
not
sir.
happen. I am telling you, it's in the lighter vein.
Absolutely, sir.
Any more questions,
Any
my dear
question?
friends? So let's have some questions from our students, sir.
Absolutely, sir. If you're not able to ask students, you can put it on the chat also.
Students, all our students are very brave, sir. They will come online, no problem.
Okay, looking forward. Any questions on your career, on your on the financial markets, or maybe even certifications? I can talk to you about it.
Good morning, sir.
Hi, good morning.
Sir, this is Shambhavi from MBA BU, Dayanand Sagar. Sir, I wanted to ask you, can you please tell us which is a good institution to get into this financial market course, like stock market in-depth analysis courses will be there, no? For such courses, which institutions would we get like very popular or important to take up?
Right. See, some of the bodies we are empaneled with, it generally what we hear is if you are wanting to work in the financial services, maybe a bank, but not exactly doing banking functions. The non-banks, what I talked about is the wealth management, the mutual funds, or maybe a stockbroking unit. They all mandate certifications from bodies like the National Stock Exchange or maybe from SEBI. SEBI has
Yes.
got a training institute called NISM, National Institute of
Yes.
Securities Market. And today, I was very, I would say, maybe unfortunate because there's one more body which has just recently, we have got collaborated with a body called CISI. It's called the Chartered Institute of Securities and Investments. Like anybody who wants to do professional accountancy, they can do a CA, or they may want to look at international certification, they can do an ACCA. Today, I can proudly say, if you want to look at international certifications in the stock markets, look at the CISI. The advantage is, when you finish programs from CISI, you can even suffix your name. If it's Shambhavi, you can put Shambhavi ACISI, just like you put an ACA. So that's the visibility you create amongst the companies who are looking at newer and newer certifications. I know for a fact doing such programs will give you that weightage in your resume, and I'm sure it will also build you that acumen for your personal finance. So these are the bodies you should be looking at. If you're looking at a hardcore, research kind of a program, you can look at short-term courses from the National Stock Exchange or NISM or CISI. But if you look at a long-term programs, you can look at CFA or a CFP. They're all pretty expensive compared to what these bodies offer. So I think, in short, I can tell you, look at programs from the NSC, NISM, maybe even a CISI. I have actually discussed some programs with directors and and also Chandrasekhar sir. I think you can get a good idea about what these programs can help you with.
Okay, sir. Thank you.
Sure.
So you told about one international, that is ACC something. Can you please tell me again?
It's called CISI.
No, sir. I have
CISI.
noted down that. Another one you told
Oh,
like
that
international.
is a chartered accountancy course. That's ACCA. That's a
Yes, sir.
UK based program. But that's again
Okay.
for your accounting. If you're looking at financial services, these are the programs you may
Okay,
be
sir.
wanting to interest.
Yes,
See the
NISM and
NSC, NISM, CISI.
yes, sir. Thank you.
Yeah. Any more questions, friends? So if there are no more questions, Murthy sir, shall we wind up?
I think we can give 1 more minute for our students.
Yes, sir.
Students, please take the opportunity of asking some question. We are having an expert before us. We shall take the best out of him. Feel free to talk. Jai Sindhu. No, so I expected some questions from you. Chetan, what about you?
Hello, sir.
Hi.
Sir, can you give us some more insights on FANG, sir?
FANG stocks, basically they are abbreviation for Facebook, Amazon, Apple, Netflix, and Google. They are the top companies. Why I mentioned FANG especially is because this broker, Motilal, is one of the largest brokers in India, one of the oldest brokers, I would say. And they have tied up with NASDAQ and introduced a product called Motilal NASDAQ ETF. Now, you want to own either one of these stocks, an Amazon or an Apple. See, they're all priced pretty high. If you want to individually own, if you look at Amazon and all, it'll be around $900 here. You convert that into rupees, it's something like 63,000 rupees. Now, I wouldn't personally want to buy a stock which is at 63,000 rupees, one share. I rather would think wanting to own all these companies. What does mutual fund, what does Motilal do is they will pull up money from you and I, and build a corpus, and then on behalf of our money, they will buy all these stocks, and you will get literally part owned, ownership of these stocks. That's how it works. That's how a mutual fund works. That's the concept of an ETF also. So they basically buy the moment you invest 1 unit of 1,000 rupees, and you will part own all these FANG stocks. There'll be more than these FANG stocks. I think there are around 15 stocks, is what I understand. Site nsc.com, nscindia.com, and go into these ETF as one menu. You will see Motilal ETF there, and you can see the stocks. Or you just Google it also. You'll know what all stocks Motilal ETF part owns.
Mr. Sivaram,
Then you will also own part of it.
Sure, sir. Okay, sir. Thank you.
Mr. Sivaram, are you doing portfolio management in your company?
Sir, I didn't hear you, sir.
Are you doing portfolio management in your company?
From Finmark's point of view, Glenn was actually involved in it, but since our bandwidth is increasing more towards college programs, so is slightly staying away. But I still know that he is managing money for a few stocks, for a few investors.
So if you're doing, I wanted to give some sizable amount.
Okay. I'll just check with Glenn, sir. I'll ask him to talk to you, sir.
Okay, thank you.
Just that you have mentioned about PMS. I think students, please take note. This is again what is also catching a lot of people who are busy. Like the professors and doctors, they're not known to be very good investors. They would rather want to give money to somebody to manage it. Take advice. It's a career, I would say.
Shivraman, you don't want to take money from me?
I love to, sir, but Glenn has got the license to do it.
Okay.
I do it also, but okay. I am actually doing it only for a few friends of mine and family members.
Okay.
Because the license is pretty costly, sir, to handle.
So what is the return you got it?
I did not participate in this rally that went up so high. But I'm just waiting for some funds from January, and I'm looking at a few stocks. I think if you ask me personally, I'm interested in a stock called ITC. It has not, it has not given its full, movement in the market. And I believe 2021 it will start moving up. So if I'm looking at a 30% return, ITC would be the bet.
Any more stocks you have in mind?
Besides ITC, sir, I would be interested to look at IRCTC. That's the monopoly. Nobody is there to compete with IRCTC, the Indian Railways catering and technology company, where you book your tickets. Moment Railways gets on its feet fully operational, I think people will look to travel more, sir. And I think we should be invested in stocks like this. In this year, I'm sure 2021 again will be good for this stock.
Okay, let us expect that.
So stock wise,
yeah.
Yes, sir. Absolutely.
Let us expect 2021 will be a good year. Happy New Year to you, sir.
Absolutely, sir. Looking forward to it. Yes, sir. Thank you so much. Students also, very happy New Year. Hoping to see you next year.
Thank you, sir.
Thank you.
I think we can conclude, Mr. Sivaram.
Yes, sir.
Shall I conclude, sir? Thank you, sir. Thank you, Sivaram, sir. On behalf of Department of MBA BU, we thank you for providing us insights on innovations and opportunities in Indian financial markets. And definitely we'll discuss about the mentioned courses with the students, and we'll get back to you as soon as possible to run the courses as well. Thank you, sir.
Absolutely, sir. Thank you. Thank you so much, sir. Yeah. Thank you, sir.
Yeah, students, now log off.